Thank you for checking out this video. In this video, I look at my returns going back 11 years up until the end of this month, January, of course, 2021. I also look at the companies I've covered on the blog or the video of the last 2 years, the performance of those and how much you'd get if you invested $1,000 in each. Also, I look at how to avoid losers because, of course, making money in the market is about picking winners but avoiding losers. And so how to avoid the losers. If you get that part of the equation right, you do very well. And don't forget, subscribe or on YouTube if you want, and hit that notification bell. But also, more importantly, subscribe to my newsletter. It's up there, top left, press the I. There's something very special coming up I want you to be part of, maybe you can help with. And also, you'll get my next stock idea to your inbox if you do that. And I'm looking at one. It's very under the radar. It's very exciting. I'm not going to reveal it until I'm, sort of fully researched it, but I like it, and you'll get that to your inbox if you hit that I. Subscribe via my newsletter, so your first name and email address is all you need. Okay, let's get into the video. The content of this video does not constitute investment advice. Do your own research. If you do invest in anything mentioned in this video without doing your own research and the share price goes down, you only have yourself to blame. However, if the share price goes up and you want to give me some credit, I'm happy with that. So I put this poll out on Twitter. What affects you the more, the pleasure of a big gain or the pain of a big loss? And of course, the gain, 23%, the pain, 76.3%, of course, because we don't expect losses. We go in it to make money. And so it hurts when it hits us the hardest. It hits you in the pocket. You're trying to make money, takes some money away from you. But 689 votes there, and it's not nice. But you can avoid that. There are two parts of investing: making money, of course, making money, picking winners, and then avoiding losers. Like I said there, picking winners, avoiding losers. That's what making money is all about. One of the biggest causes of losing money is buying the stock at the wrong price. What is the wrong price? I'll talk about that later, okay? But first, my returns up until January 29th, 2021. So the last month is all screenshotted from my Barclays Smart Investor account. I like to call it Smart Investor. Even if you lose a tump load of money, it's still Smart Investor. So 20% of the last month, it would have been better. But we had a couple of days of sell-off, didn't we? In the last few days of the month, I think, was it Tuesday to Thursday, really big sell-off because GameStop stuff and all that. And so it would have been better than that, probably another sort of 5% maybe. Last 3 months, 46.7. Last 12 months, I doubled my account size, which is very nice. Over the last 3 years, 528%. And since the start, November, this is when the Smart Investor account turned digital, or I don't know whether they started recording this kind of data. But the start, 6,000%, and that goes back, like I said, since 17th 11th, 2009. That's that amount. How much is that? It's basically 59 times my current value, the amount it started off with, so you have to work that out. How much did I start off with? If I start off with $1,000, I'd have £59,000. If I started with 10,000, I'd have 590. If I started off with 100,000, I'd have 5.9 million. Where do you think I am in between those lot? Up to you. I'm not telling you. There we are. This is my holdings, by the way, at the moment. So Escape Hunt, 185%, Gfinity, 172%, Ilika, 120%. Again, screenshotted from Barclays. I've cut and pasted the amount of shares I hold out there and the amount of price. Polarian, 125. On the market, just 5% there. It's taking a dip recently. Don't know why. It's, buy the dip. Trackwise Designs up 13 and Brand Shield down 2.29. I told you there was a seller in there, didn't I? I mean, when I did the video, I said, listen, it didn't tick my chart box. In fact, if you want to look there, you can see the previous video, or just search my channel for the reason I invested there. But I said the chart has risen quite strongly and there's maybe a seller in there. And the reason it rose because I sent out the information to people on my newsletter and they got it first. I think people jumped in quickly and they pushed the price up because it's quite illiquid, not very well-known stock, only just IPO'd. And so I said, calm down. Let it calm down. That was the Friday and the Sunday. I said, let it calm down. And it's calmed down. It's come down to 26 pence. And it's sort of bounced. It went down to 25 and bounced. So I did say it'd come back to the 20s. And it has. So, again, buy the dip. If you like the company, if you've done the research, listen, it's your money. If you lose it, it's your fault. Not mine. It's an investment idea. Not all ideas are good. Some are cracking. Some are amazing. But you have to take a responsibility for your own ideas, of course, and your money. Okay, these are the stocks that I've done in the last 2 years. So 2 stocks of 10 bagged. That's these two up here, the gold ones, Powerhouse and Argo Blockchain. These are stocks I've covered on video. 10 stocks have doubled, 20 stocks have made a profit, 5 made a loss, okay? And that's the amount you've got, 25,000, £1,000 in each. So basically over 2 year period, if you invested in 25 grand, profit would be 47 grand. The worth of that now would be that, £72,000. So your 25 grand would never worth 72. That's the profit. And that's a return of 188%, okay, on all those stocks. If you put a grand into each of those, when I covered them, then that's how much you'd have. Of course, there's no dealing costs involved with that. Just keep it simple. So making money in the market is about picking winners and avoiding losers. Avoiding losers, just a case of avoiding buying at the wrong price. You know, fear of missing out is usually the main reason people pay the wrong price. Do me a favour, you know, get on the charts here and look at a chart. Always look at a chart. So it kicks in when everyone is excited about a stock price rising quickly. That's a big telltale sign, you know. No one talks about a stock when you should be buying it, actually. When you should be buying a stock is when everyone's quiet about it. You're doing research, you're realising this is undervalued, the potential is huge. And no one knows about it. I often do that stocks and look on Twitter, for example, put the hashtag in and their ticker and see if anyone's searching. There's a stock I'm looking at now. And literally, no one's mentioning it. There's no volume. I love it. And I think, wow, look at that. And I'm just researching it. And it's nice. And that's what you're. When something's very hot, like Bitcoin was recently, my father, who's 76, called me up and said, Just, shall I buy Bitcoin? He can barely get on the internet. He's trying to buy Bitcoin. And that shows how many people are talking about it. When that many people are talking about a stock, right, down the local pub, one of the people that is crossing the mainstream, too late. It's had its run. That is pretty much the top of the market, okay? I'm not saying Bitcoin won't go higher, but it had a dip after my father said he literally called it when it was like $40,000 and it dropped down to 30,000, you know, the day after. That's the height of frenzy. Fear of missing out. When you have fear of missing out and you want to jump in, you realise it's the wrong time, okay? If everyone's talking about it. So buying after the price has risen a lot in a short space of time is the wrong price. That's the wrong price, okay? This is when the price becomes extremely overbought and people are going to take profit very soon. I look at a chart here and I'll just give you a chart. This is what you should be doing. By the way, there's an I button up there, top right, sorry. And you click on that, you can get some more charting stuff. You've never done charting before, videos from me. But this is called an RSI. It's a relative strength index. I always put these in the charts I have, and it shows the momentum. It sort of rises, you see, before the price does. You can see that? Now, below, this is 50 and below. This is 60, and this is 70. Above 70 is regarded as, overbought. But some stocks don't get going until it gets to over 70. But you've got to be careful then. Now, over 80, that's where it's got really... Look at this now. This is Gfinity, by the way. Excellent charts, going up higher lows all the way. It'll crack on again. These are basically, if you look at the peaks here, it takes about 3 months. And I don't know, a lot of charts, 2-3 months. 3 months is the magic number. So I did think of this idea to come up with something very catchy. I said, if a stock has risen by 100% within 100 days, let it calm down. The closer it gets to the 100 days after that big spike, the more chance it's going to rally again. Like Gfinity now, it'll probably go sideways for a while. A couple of months, maybe 2-3 months, but then it'll go up again. It'll climb a ladder again. You've got to have patience. Don't start getting bored here, because that's when it starts to climb. And look at the RSI, okay? Over 80, you don't buy here. You don't buy there. That's a red light. It's flashing warning. Fear of missing out is rising. Everyone's talking about it. Don't buy here. Because if you buy it there, pretty much at 4.5 pence, pretty much, it'll come back down almost at 2.5 pence. All right. Now the RSI is going back down. It's good time buy zone is when it goes from 50 to 60. When it's going upwards, basically through the 60 from 50. So it's coming from underneath. That's when it's building. That's a good buy zone. Okay. And look at that. For some reason, there's some sells coming, but it just powered down again there. And then don't buy here, because if even it's oversold, as it's called, below 30, it can carry on going, you know. So you need an uptick, and then again, uptick again, and then if you bought here like 50 and 60 at this point, boom, right through. And what else was that? Here again, if you bought here 50 and 60, it's up there, then up there. Okay, it's one time. No, again, it faked there. If you bought there, boom, up again. Okay, it'll come back down there. But all these times, it's powered through the 50-60 line. It's really moved. Can you see that? It's really moved on the 50, going through the 50, from the 50 up through the 60. It's really moved. But do not buy when it's up here. And even on the 70, you know, I mean, it did pop in the 70 here. But if you're thinking of buying up here, you're probably a bit too late. You're buying on this day when it's very hot. It could come back straight back down. So to be safe, always buy on this bit here. Okay, when it's from 50 to 60, I said don't buy zone. RSI is 80 plus. That's a don't buy zone. There up there. It's really overcooking, overboiling. Be careful. 70 plus when it's above the 70 level. Be careful there. But the buy zone is when it's going from the 50 to 60. So if you go in the right direction, if it's coming down that way, don't, because the momentum is going weaker. Wait until it comes back up and goes back up that way. Hope that makes sense. By the way, if you want to learn more how to set up a chart or learn more about technical analysis, please click the eye top right of the screen there, and there's some more videos for you right there. And there's also my newsletter to add your name and email address, and I'll send you out some stock ideas. And there's a project coming up I want to do. I'm quite excited about. All right. Thank you for watching. Like I said, as always, don't forget, hit that I button at the top there for information on previous videos or to subscribe to my newsletter. And if you want to obviously see my next video on YouTube, then don't forget, hit that subscribe button and notification bell. And there's some more videos for you to watch right there. And if you want to subscribe to YouTube, you can hit my face right there. Don't hit it. Okay, be gentle. Thanks very much.